So just how bad is the UK economy going to be affected by Brexit? First of all, I'd like to say if you care about me going into this nerdy detail that you don't get in a bulletin, in the mainstream media, or in an article in a paper, let me know by hitting that subscribe button. So this is the graph that we're all used to seeing by now, showing the fall of 0.2% in the last quarter out of GDP growth rate per quarter in the UK. And it's the worst fall we've had since 2012, since we were still recovering from the economic crash in 2008 and Tory austerity was taking hold. As you've also probably heard, if we get a second quarter where we're in the negative figures, we're officially in a recession. So, are we heading for a recession or even a depression? Is the UK economy going to slump into oblivion? Or is this just a blip in the graphs and charts? Well, today we're going to answer that question along with lots of other things happening in the European and worldwide economies. If we compare this growth rate to the German economy growth rate, you can see the German economy has itself received some negative slumps in the past, most recently in the third quarter of 2018. Meanwhile, the UK economy has more consistently been doing better, pretty much staying in the positive all the way through and doing much better during the 2015 era, and it was consistently better even after the UK voted to leave the EU in the first half of 2016 through to 2017, where the German economy did exceptionally well. But the UK and German economies have had more or less similar growth rates until more recently, when the withdrawal agreement has been rejected and Brexit uncertainty, along with a lack of consumer confidence in investing in the UK and investing in factories, because you don't know whether we're going to be inside a customs union to allow goods into the UK and whether EU nationals will be allowed to be employed in the UK, along with the fear that comes along with many businesses of a no-deal Brexit, because of course that will mean a hard border with delays. And it's that stockpiling that we had before the 29th of March 2019, I'll show you in a graph later, that meant that the manufacturing businesses in particular invested in all these warehouses to stockpile all their goods, invested all that time and energy into leaving the EU on the 29th of March, and then we didn't actually leave on the 29th of March, so the businesses that did all that lost revenue anticipating a Brexit that never came. And so that's probably what analysts have been saying has caused this recent slump. If you compare it to the French economy, of course the French economy has always been in the positive in the last 5 years, whereas the UK economy has actually been riding at more or less a similar kind of level throughout this time, up until that most recent slump. The Italian economy has consistently been performing much worse than the UK economy. Of course, the Italian economy has itself seen a recent slump of minus 0.2%, and so has the UK. So if we look at overall European Union GDP growth rate in the black line versus US GDP growth rate in the blue bars, we can see that the US right now is growing much faster than the EU. In fact, the black line almost resembles the black lines I've been showing you on the previous maps. It's almost as if the UK economy is affecting the European Union economy growth rates. But there could be a number of other factors playing into this. For example, if we compare the British pound to the dollar, represented by the black line, compared to the euro to the dollar, represented by the blue line, we can see that both currencies have slumped in the last 5 years. But of course, more recently, the pound has been doing worse than the euro. And in fact, during April, March 2019, the pound was performing much better than the euro. So something's going on with the euro economy, which is making investors sell off the euro. Of course, there will be little sense in Boris Johnson delivering a budget before the 31st of October 2019 if we don't know what our relationship with the EU will be like. But on the other hand, how will he deliver on those numerous spending pledges he's made? The inflation is the level at which the cost of goods are increasing over time in the UK, which remains, as you can see, at 2%. But it is likely to increase, especially if the pound is weak, as I've just shown. This will mean that it makes it more expensive to buy goods abroad. If inflation rises, that means that you will have to pay more for your shopping. Now, the Bank of England is keeping interest rates, represented by the black line, low at 0.75%. Interest rates are the proportion of a loan that is charged to the person who borrows the money. If inflation is low, the Bank of England should cut interest rates to encourage people to borrow and spend more money and help the economy grow. But it's not doing that. Why? Well, because Brexit uncertainty is making the pound drop. This drop makes it more expensive to buy goods abroad and actually raises inflation, raises those blue bar lines. Encourage too much borrowing and spending when inflation is high, and inflation continues to get higher and higher, making it expensive to buy anything, as goods essentially kind of run out. Supply cannot simply meet demand. But discourage it by raising interest rates, then you can reduce inflation. But of course, economic growth will slow and people may save more but have less disposable income. So the Bank of England has to strike the right balance in uncertain times, which is where Boris comes in. Giving businesses the certainty of where their goods will be coming from and who will be employed by them and who their customers will be is for the question of Brexit. Apart from spending pledges, there is very little Boris can actually do between now and then. But inflation across the UK is not solely because of Brexit. Of course, our economy is reliant on the European Union economies as well, and their inflation rate is consistently higher than the UK inflation rate, probably because the euro is in itself falling against the dollar consistently. We compare the European Union inflation rate compared to the US inflation rate. In the black line, we see this pattern again. The US inflation rate is actually lower right now than the EU inflation rate. Of course, if this continues, goods might end up being more expensive coming from the European Union than they would be from the US. That's obviously before you get to the cost of import, etc. Brexit has created some extreme negatives on the UK economy. If we look at business confidence, we can see that every time the UK economy slows or stops growing altogether and goes into the negative, business confidence, as this graph shows, slumps into the negatives as well. And that's happened most recently, as well as in 2012, as well as following the 2016 EU referendum vote, and of course during the economic crash in 2008 as well. If we look at consumer confidence, we can see more or less a similar kind of pattern, except consumers are much less affected by news events than business investors are. But consumer confidence, more or less, has always been in the negatives anyway. This graph shows what pretty much caused the most recent downturn. So this was the 2008 banking crisis. Manufacturing rose all the way through to 2012 when austerity was taking hold and we had that slight slump, remember? And then it continued even past the EU referendum vote. But of course, more recently, as it seems likely that we're going to pull a no-deal Brexit, and as the manufacturing industry stockpiled for a Brexit in the 29th of March, and that 29th of March Brexit didn't happen, which meant them wasting money essentially back then. That meant that the manufacturing industry has suffered. Of course, confidence in the manufacturing industry is of course low because we don't know how easy it is going to be to get goods into the country, nor how easy it is going to be to get employers from EU nationals. As for the service sector, the strongest part of the UK economy, that's seeing a similar kind of stagnation or slump. Of course, it's more positive than the manufacturing sector, but it's still seeing this a similar kind of not great economics. The retail sector is much harder to decipher. of course, because it's more seasonal. But the good news is that unemployment continues to fall and wages continue to rise. So what do you think about the UK economy? Do you think it will survive Brexit? As always, join in the debate below and subscribe.